This Week in Startups is brought to you by Braintree. If you're running a business, it's only a matter of time before you'll have to deal with declined transactions. To learn more about how Braintree can help, visit braintreepayments.com/twist. And Squarespace. Start building your website today at squarespace.com. Enter offer code TWIST at checkout to get 10% off.
Hey everybody, welcome to This Week in Startups, the show where we talk about technology startups, entrepreneurship, investing in these companies, and generally solving the biggest problems on the planet for humanity, even off the planet. Got a lot of Mars terraforming stuff going on as well. And these problems are so complex, they're so outrageously audacious that they can only be taken on by entrepreneurs. Governments, they're long been out of the business of doing audacious things. In fact, it feels like there's nothing less audacious and nothing less effective than having government try to solve a problem. The Manhattan Project, as Peter Thiel points out, huge project, hundreds of thousands of people working on it with a singular goal to defeat communism and evil people around the world through the use of nuclear devices. Sadly, we were able to accomplish that goal, or who knows? I mean, we could do some alternate fiction here. Maybe the world would be just a giant communist totalitarian regime right now if we hadn't dropped those bombs. Nobody knows. But the point is, we do know that government is completely ineffective. And we know that the problems we face in making a better world, a just world, and more equal world are going to be solved by entrepreneurs building technology. That's what's made it work to date, and I think that's what's going to carry the day going forward. Back in 2011, I was introduced, or in 2010, I was introduced to a product called Bitcoin. It was a covert, underground currency project. And I thought, God, this is the most dangerous thing I've ever seen. If this can be executed on and it can hit any level of scale, it could destabilize many regions in the world where dictators, corrupt government officials manipulate currencies. And it could create a global currency that could really transform humanity, taking away things like bank fees or control of money, reprinting of currencies, just all kinds of wacky stuff. And the key in that blog post I wrote back in the day about this most dangerous open source project I'd ever seen was that it could be. It turns out that Bitcoin has largely been disappointing. People have used it in order to move currencies and as a speculative device to try to make money. But they didn't really use Bitcoin itself for any kind of application. We were sitting here on this very program 4 years ago talking about people walking into cafes, tapping their phone and paying with Bitcoin. We're talking about people transferring money around the world with Bitcoin. Some of that's happening, but in regions that you probably are not aware of. And the speculation market, when Bitcoin went up to 1,200, looked like it wouldn't stop until it hit 12,000, and then it came crashing back down. In other words, Bitcoin has become a non-starter. And on top of that, Bitcoin has got a lot of problems because of the governmental structure it has. The majority of miners, the people who make the Bitcoins, who are wasting tons of energy in this quest to finish the Bitcoin production, which is going to happen at some point in the next 10 years, they're all in China now, and they're all using stolen electricity. We had Brock Pierce on the program talking about these issues. So now, to push changes through is a very inefficient process. Some people are claiming that Bitcoin might collapse upon itself because of governance issues. That's unlikely to happen. There's too much at stake. But hundreds of millions of dollars have been poured into Bitcoin, and to date, VCs have been largely disappointed. However, during this whole movement of cryptocurrency, something emerged called the blockchain. The underlying architecture of Bitcoin and other cryptocurrencies is an open ledger system. What does it mean, an open ledger? It means every transaction that occurs between the different wallets on the different pieces of currency is recorded, and everybody has a copy of it. That is ultimately what will be the legacy of Bitcoin. In another 20, 30, 40 years, we may not talk about Bitcoin. It may become some tulip craze that business schools laugh about and study. But the blockchain is here to stay. The blockchain is a true innovation like peer-to-peer technology or the open web or open source software itself. And today I've got Adam Ludwin on the program, who is the co-founder and CEO of Chain.com, Formerly, he was a partner at RRE Ventures, a venture firm out of New York, run by a guy who used to run Coca-Cola, James Robinson and his son, and Stu, a great group over there. Have invested in a lot of interesting things together. I know they're particularly interested in the cryptocurrency space. But Adam, you've raised over $40 million from the A-list, NASDAQ, Fidelity, Capital One, Citi, First Data, RRE Ventures, Khosla, I think I mentioned. And you're not a Bitcoin startup, are you? You're a blockchain startup.
That's right. Actually, the company started out, the very first product we ever launched, April 2014, was a Bitcoin API. So when we started, we thought, look, this is a fascinating new area. Digital currencies are proliferating. By that point, by 14, you had written that blog post a couple years before that. By 14, developers were kind of rushing into the space saying, we want to just figure this out and build interesting things. But there was no platform for them to do that. There was no Twilio. There was no Stripe. There was no developer-friendly way to get an app up and running connected to the Bitcoin network. What do I mean? I mean, indexing data off the network so you're not doing calls to the network every time you want to show a balance. Or managing your users' private keys, which are the things that have been at the heart of all the controversies when Mt. Gox and other exchanges have been hacked. They really are, they're not hacking Bitcoin, they're stealing the private keys.
Yeah, so they're stealing basically people's passwords.
Effectively.
Yeah.
So, or literally you can think of it like they're stealing the key to their safety deposit box.
Right.
And just going in and taking the money out, right? So the boxes and the vaults, they're still fine, but the keys, when you lose them, you're out of luck. So we said, let's just build essentially Stripe or Twilio for this next generation of fintech. And so, of course, at that point, Bitcoin was it. It was the only game in town. So we built our first API for Bitcoin, developer facing. And by August of that year, we were powering like a third of all Bitcoin apps and services. So people building remittance apps, tipping services, wallets, exchanges, and the broader financial community finally started to pay attention to Bitcoin. They had been ignoring it, unaware of it, indifferent, and then sort of antagonistic. And now they're thinking, well, we better figure out how this works.
In some cases, lobbying against it.
In some cases, lobbying against it for sure.
Yeah, looking for government intervention.
That's right.
Some governments, in fact, blocked the use of Bitcoin.
So it was a contentious time, but there were some, I think, early movers from the traditional financial sector who reached out to us, and there were actually three. I remember all three in August of 2014, NASDAQ, Fidelity, and First Data, that said, can you come and spend time with our executives and explain Bitcoin? And I didn't go in there thinking I was going to pitch them or sell them on our platform. I thought this is a good opportunity for me to understand, what are they thinking about this new technology? And when they ask me, what should we do? I better have some answer. I can't say, I have no idea what you should do. So logically, when I went and met with NASDAQ, I said, maybe think about, look, you're an exchange. What about people trading Bitcoin? First Data, you're a payment processor. Maybe help people accept Bitcoin at point of sale. Or Fidelity, you're an asset manager. People might want to view this as an asset class to put in their portfolio for retirement savings. So I had an answer in the back of my head, but I did not expect to hear what I ended up hearing, which was, I would do my demos. I would explain Bitcoin, usually to their CEO and their CEO executive team. And the message I got back from those three and then the subsequent meetings was always the same. It was, can you please explain to us one more time how the heck you're sending money from that phone over there to Wikipedia where you're donating? Or can you please explain how you just moved money back to your office in San Francisco? They could not understand how this was happening because...
How did you explain that to them? To people who were much more experienced, frankly, smarter than you when it came to the financial system and how it worked, but were completely confounded by the paradigm shift of cryptocurrency.
And I had to figure that out because I needed to explain this in a way that they could understand, but also grok that there was something fundamentally new here. So what I said to them was this. I said, email. When you send someone a PDF from your phone or your laptop to your colleague's laptop, that PDF doesn't disappear off your machine when it arrives at your coworker's machine. That would be very strange. Or if you take a photo with your iPhone and you send it to your friend or your family member, they get the photo, and it doesn't disappear off your camera roll. So what I explained is when it comes to digital content, when we transfer it electronically, it copies. And that's just how it works. And that works great for media and content. When it comes to digital money, if I have $5 on my phone and I send it to you, it's very important I don't have the $5 on my phone afterwards.
Right.
We never had a solution to that problem, which became defined as the quote unquote double spending problem. The fact that I could send you some digital money and still have it and send it to someone else, and then the whole thing breaks. And so what I explained was Bitcoin introduced by using cryptography, and I gave a little bit of background on cryptography, introduced a new methodology, a new architecture for not digitally copying when you send something, but digitally transferring. And that was new. And so when they understood that core idea, that was the aha moment for our company, because they played back something to me that I was not expecting. They played back, we don't think our clients want to use Bitcoin at the point of sale. We're not getting asked by our, customers to hold this in their portfolios. But if you could make a security move between our back office and the bank's broker-dealer, the way this moves, we want to talk to you. Or if you can make a credit card payment go through without it costing 3% for the merchant and take 2 days to actually hit the bank account, we want to talk to you. Or if you can make a cross-border payment as obsolete as a cross-border email, which doesn't make sense because we never, it doesn't even conceive of that, right?
Of what borders an email is
what is
crossing.
a border? What is a border? So that's what they played back, and that really set us on the path to what we do now.
Okay, and when we get back, I want to hear about what chain.com, an amazing domain name.
But I love talking about Bitcoin. Thank you. There's a story about the domain.
When we get back, I'm going to find out how you bought that $1 million domain name, because it's worth $1 million in my mind. When we get back on This Week in Startups. Hey everybody, let me talk to you about an important topic for my e-commerce and transactional startups out there, and even the big businesses. You are dealing with something that is horrible, the decline. Everybody who is in e-commerce deals with declines, and that's when a customer's bank refuses a charge. It happens to the best of us. It happens every day. It happens every hour, and there's many reasons why it can happen. Somebody could have insufficient funds, maybe an expired card, or they entered the card number wrong. All these different reasons of why you could get a decline, and declines can hurt your bottom line. So here's some tips to reduce your decline rate. Number one, keep the customer payment info current, especially if you're in a subscription business. This means on a regular basis, knowing and informing people that their card is going to decline at this point in time. And you have to collect those security card codes like AVS and the CVV numbers, the one on the back, the one that's written but not raised. You know what those things are, those security codes. You have to get those. And the Braintree platform is the one that makes all of this easy. All of my startups use Braintree, and it's just so easy to do all this if you use Braintree, which you can visit braintreepayments.com/twist. Go ahead and visit braintreepayments.com/twist. And they will take care of all this for you. You can click on a control panel and start collecting those AVS and CVV numbers. And you can opt into Braintree's account updater, which auto prompts merchants and customers to keep payment info current. Like I was just talking about, you have to have a system for keeping the information current. You want to solve declines, and you can solve the declines with Braintree. All of my startups use it. Everybody loves it. You drop in some code and you're up and running instantly. Go to braintreepayments.com/twist, braintreepayments.com/twist. It is a great product. I fully endorse it. All my startups use it. Let's get back to this amazing program. Thank you, Braintree. Hey, everybody. Welcome back to This Week in Startups. I'm your host, Jason Calacanis, and this is the twice weekly program that I've been doing for 6 or 7 years now, where we talk about technologies and entrepreneurs and investors who are changing the course of humanity. And I'm not understating it. The world is changing very rapidly. We live in the age of advancements, and everything from energy to food to transportation are being changed. Even where we live, as in which planet, is going to change in our lifetime. And one of the big changes is currency and money. And money is a construct that did not always exist in humanity, but that was a huge change. Without currency, we couldn't have had the societies scale to the level they did. I know this because I listened to this awesome audiobook called Sapiens, which is available at audible.com/twist for free if you want to get it. You ever listen to this book, Sapiens?
No.
It's pretty amazing to think about humanity and how mythology, the fact that we could all buy into a set of laws or stories, and how currency, this ability to trade value for little pieces of metal that were rare in coins, as opposed to trading actual sheep and wheat and all kinds of other things, silks, teas, coffees, whatever. The fact that we moved to this currency was a shift that actually created the ability to have cities and countries, empires, nation states. Some bad things, some good things. But I'm talking today with Adam Ludwin, who is running chain.com. You can follow them at Chain. That's a great Twitter handle. Or chain.com. That's $1 million domain name. How much you pay for that?
Less than $1 million.
But more than 500.
Less than 500.
Really?
Yeah.
You got a good deal. If you
Thank
pay
you.
less than 500, you got a great deal. That's legitimately a seven-figure domain.
We had only seed capital when we bought it, and I went to my investors and said, I want to spend 15% of our capital on this domain.
Oof.
And they said, your idea is so crazy anyway, you might as well. And
Good.
actually, so that's a hat tip to RRE, by the way, for saying, go for it. But actually, it really helped in the beginning because when you have very little, you're always looking for a way to establish credibility.
Yeah.
And that, these are these startup hacks. You kind of have to figure out how to do these chicken and egg things.
One.
It really does help. It really does.
Inside.com, com.com, mouth.com. These are all brands that, like, when you own that brand, Facebook.com.
Let me tell you two other
Uber.com.
stories on this real quick. Yeah. So Twitter, we have the @chain, right?
Yeah.
The guy that had @chain was just some hacker overseas. And we said we would like the @chain name. But on Twitter, you can't actually, I probably shouldn't even be saying what we did because I think it's against term of service.
You can't purchase
can't
it.
purchase
it's against the term of service, but it does occur. What you can do is somebody could buy chain on twitter.org from you, and you could throw in chain for free.
Okay, here's what actually happened. Twitter, don't listen to this part. I reached out to the guy and said, you just change your name and we'll just free up the name and then I'll go register it. Okay.
You grab it.
Yeah, I'll grab it. So we had like 10 computers set up around my living room. Everyone's like ready to grab it the second he releases
3,
it.
2, go.
Go. And we did, but he didn't believe we were going to pay him. We said we pay you $2,000, or he said 1,000. He said 2,000. We said deal.
Yeah.
He's like, there's no way you're doing it. So I just literally said, what's your PayPal? And I sent him $2,000.
Sure. Of course.
Because what's the downside? And he's like, wow, okay, let's do it. So those are the things you just got to do when you're starting out.
Take a little bit of risk.
You got to,
but it's a major reward.
Yep.
So you build picks and shovels, the platform. You try to build Twilio for Bitcoin. Bitcoin turns out to be a bust. I don't know if you agree with my preamble of what happened.
Really quick on that.
Yeah.
You say Bitcoin's. I view Bitcoin like BitTorrent. What do I mean by that? It's never going away. It's never going away. It's never going to go away because people that are either off the grid or want to be off the grid are going to use it.
Gotcha.
And that's what people are using it for today.
So there's a use case for Bitcoin, which is trading movies and TV shows. It may never become
BitTorrent. You mean
BitTorrent rather? And people can use Bitcoin because they may want to buy stuff that
people want to. Let me give you a pretty morally righteous use case for Bitcoin. You want to donate to a political cause in a country where you go to jail if it gets found out.
Perfect.
Okay, send them Bitcoin. Let them deal with it. Right. You want to buy something on the internet that you don't want showing up in your card statement. That's really what most Bitcoin activity today is about, outside of the speculation.
Right.
BitTorrent.
If you want to buy porn, drugs, or a hit, you watch Mr. Robot.
Yes.
Yeah, it's like a Mr. Robot type of thing. It's if you're using it, it could be, there's a 20% chance you're using it for something that you would be fine with everybody knowing. There's an 80% chance that you might want your privacy.
And look, and Bitcoin, there are a lot of innovations that are now coming online that are next generation Bitcoin-like, open networks, decentralized, no institutions, not currencies you're familiar with, just new asset classes. And I think similar to how kind of Napster and BitTorrent presaged iTunes, Spotify, sort of more mainstream, quote unquote, legally friendly, consumer and business friendly versions.
More legitimate.
We're seeing that now in this space. And our company is obviously working toward that. So
What is that, Ethereum? What do they call
Ethereum.
that? Ethereum.
Ethereum is a great example of, you wouldn't have gotten to Ethereum without Bitcoin.
What's the main difference? I like the fact that you can describe these things in good terms. I think you did a good job of describing the blockchain and how cryptocurrency worked, going across borders, et cetera. Ethereum.
Yep.
what is Ethereum? Why is it the number 2 or 3 currency today? I'm not sure where it is now in terms of market
it is
cap.
number 2. It usually hangs around $1 billion market cap.
Okay. And
Bitcoin's
the market
around
cap
12
of
billion.
Bitcoin?
12 billion.
Got it. So it's 1/10 or 8%-ish.
Yep. Mm-hmm.
Gotcha. How did it get there? It crushed Ripple and some other stuff.
Yep.
Why?
So the main goal of Ethereum is to create decentralized computing. So the main goal of Bitcoin is let's create a new currency and move that currency back and forth.
Sure.
Ethereum generalizes that 1 degree and says we're going to have a currency too, but that's not the point. The point of our currency is just to pay the fees to do computing in a decentralized way.
Got it.
So what's a use case? The two
like
of us.
the SETI project.
It's kind of like the SETI project. Let's say the two of us want to enter into a bet on the election, Trump-Hillary. Okay. Now,
what odds?
Let's say 80% for Hillary.
Okay, 4 to 1.
Right, 4 to 1.
I put up 1,000, you put up 4.
How do we do that? Well, we typically would go find some third party bookie or service to sort of be the escrow, and they're going to take the rules that we agree to, the odds and kind of the payout and the amount we're putting in and all that into a contract. Yeah. And then whenever the event happens, they're going to...
Big Joe. I could get Big Joe to take this.
Big Joe's going to pay out to us the results on the other side of the event. Well, Ethereum says we don't need Big Joe. We can just create a quote-unquote smart contract that we put all the rules in programmatically into some script. We put that script on the network, and the network processes the rules.
Got it.
And then after the election, the network just pays out automatically. So these are like, think of Ethereum as replacing the currency with a little program, and that the long-term bold vision here is we can decentralize computing, which has implications for everything from AWS to DNS.
And the way it would do this, it would say if President, 43rd President of the United States, or 44th President of the United States, whatever it is, equals Trump at Wikipedia or wherever, whitehouse.org, .gov, then pay, if not this. So it's very hard to manipulate.
So there's literally a programming language called Solidity, which is a new language that compiles down to the bytecode that's processed on the network. And it's fascinating. Now, the problem is, and we saw this in the news a couple months ago, that these smart contracts are, there's a lot of work left to be done to figure out how to do them securely.
Got it.
Because
they can be
there is no Big Joe, right? So Big Joe has some judgment. If somebody comes to Big Joe and says, hey, my name is Bob, and Jason told me that I can have his money, Big Joe would be like, get out of here. Ethereum, if there happened to be a line of code that says, did I say Joe? Bob?
Big Joe.
Yeah, no, Bob. That says, Bob can take the money at any time. If that happened to just be in the script, in the smart contract, guess what? We're out of luck. And we're like, oh, shoot, we just wrote the contract wrong. In other words, there was a bug in the code.
Right, so if we wrote the code that to read the Wikipedia, and the person knows Wikipedia can be edited incorrectly and has to be corrected, we could put Donald Trump one.
Right.
And for that second, it would check it.
Exactly. That's a great example, which is to say, what does the contract view as the source of truth? If it's Wikipedia and we didn't realize someone's going to edit Wikipedia. So when code replaces law and judgment, it's very rigid. It's really great because it's immutable and it works, but these things happen.
You better hope the inputs are correct.
So somebody wrote a smart contract that was called the DAO.
The DAO project.
DAO, which stands for Decentralized Autonomous Organization, which was basically, let's do venture capital with no venture capitalists.
Yes.
And
everybody was going to vote on where to invest.
That's right. First, everyone puts money into this contract, and then you get voting shares proportionate to how much money you put into the contract.
Right.
And then startups would come along and be like, I would like some money, and they would go into a queue, and then the community would vote on, do we want to fund this thing? And so there were some rules. Now, this
seems like the SEC would have a problem with this.
The
SEC does not like the idea of people being able to just randomly put money into things.
That's a whole other
Are they all
can of
accredited
worms.
investors, or are they all anonymous investors?
Oh, no. These are largely were people who invested in the Ethereum crowd sale and were sitting on 50x returns.
Got it.
So they had found money, and they're thinking, what's the next way to multiply from here?
Yeah.
Here's somebody coming along
Find the
saying,
next Uber.
we can all be VCs and we'll be the next Uber and we'll do 1,000x on our 50. I mean, it's alluring and it's a lot.
Works out.
Yeah, right. So well, how did it work out? They raised $150 million. So there's a $150 million bug bounty basically sitting on the internet in a brand new programming language. And somebody came along, actually some academics at Cornell sort of realized this was going to go south before this happened, but then somebody came along a couple weeks later, found the code.
Don't tell us how they did it.
Sure.
We're going to do a little teaser.
Okay.
When we get back from this important message, my guest Adam Ludwin is going from chain.com, is going to explain to us how the DAO project got hacked for 9 figures when we get back on This Week in Startups. Hey, let me tell you about a flawless product that I use every day. It's called Squarespace, and we build all our websites on it because it simply works, and I don't need to hire tons of developers or designers to have a great-looking website up and running in minutes. And if you go to launchscale.net, or you go to launch.co, or you go to any of our websites, Launch Festival, we always use Squarespace because it's intuitive and easy to use, and all of the people on my team can log in just like they're using Google Docs or Microsoft Word or just a calendar app, and they can just edit the website. It makes things so easy to use, and you get a free domain if you sign up for a year. It's trusted by millions and some of the most respected brands in the world. So get started, free trial today at squarespace.com. And when you decide to sign up for Squarespace, make sure you use the offer code TWIST and get 10% off your first purchase. Yes, go to squarespace.com, sign up for free. Hey, you get a free domain name if you do it for a year. And when you decide to sign up, because at least sign up for free for a trial because they're so confident, you can use the promo code TWIST. Thank you to Squarespace. I mean, they've been a supporter of this program and independent media like this program for years. Really great company. And if you're a developer or a designer or a business development person or a business person, let me tell you, that's probably the best company you could work for in New York. Anthony over there does a great job, and it's a great team. Everybody go ahead and thank at Squarespace on their Twitter and Facebook handles, and go ahead and give it a shot. If you've got a small business, or your mom or your uncle or your cousin needs to get a website up and running, or you have a special project or a portfolio, or you want to do commerce or calendars, all that stuff is in there, and it looks like $1 million, and you only pay tens of dollars. Okay, thanks again to Squarespace. Hey everybody, welcome back to This Week in Startups. My guest today is Adam Ludwin, and he is the co-founder and CEO of Chain.com, which has been around since 2014 and is backed by folks like Khosla, Capital One, Citi, Fidelity, First Data, NASDAQ, Orange, Visa, State Street, a bunch of these great corporate entities, as well as Homebrew, Kevin Ryan, Khosla, SV Angel, a bunch of Scott Bannister, he's a great investor, Science Husband, 500 Startups, BetaWorks, Saturday New York, Capital One Growth Ventures, just a really all-star group. And he's pursuing, obviously, the blockchain. But when we left, we were talking about Ethereum, which has smart contracts. The smart contracts are written in a programming language called
Solidity.
Solidity is making the rules, which are then executed on the network in a distributed fashion. However, there could be bugs, and if the rules of the smart contract, which is a smart contract is written by a programmer, it then has to be verified. So does this mean instead of attorneys in the future, we're all going to have programmers who are our attorneys, or attorneys are going to have to learn programming if we want to do smart contracts? How is that going to go down?
I tend to think that all professions start with a computer science degree 10 years from now. So yes.
Isn't that amazing though when you think about it? Like, let's say I was going to invest in your company and we did an Ethereum contract written in Solidity.
Yeah.
I got to remember that. Solidity. What does solidity mean? Does that have some
I assume
ancient
it's
Greek
some
meaning?
Something in relation to there's the ethereal nature, and then the contract's more solid. I don't know.
So solidity? Solidity, we write the contract in Solidity, but we would need a programmer to write it. Or could a novice learn how to write it? Is it like hardcore programming, or is it scripting?
It's not advisable ever when you're writing something like a smart contract to have anything but a professional do it. And this is, I mean, the reason that we were just talking about before the break, this $150 million smart contract.
The venture firm of the DAO.
Yes.
And the way it worked was the majority gets to pick. So I don't know how it was actually hacked, but the way I would hack it is I'd show up with 200 million and I would vote for my project and take all 350.
So there's actually two categories of attacks. There's sort of the game theory category,
which
is what you're describing, and then there's just like literally
I shove all my chips in. It's poker theory.
Right, literally.
I bought the pot.
Going through the code base and seeing, is there anything I can exploit here?
Got it.
And without getting into the details,
get into the details.
Well, it was the latter. In other words, there was a whole bunch of game theoretic attacks that were pretty obvious in the beginning that were published by this Cornell group.
Got it.
And then this hacker came along and said, aha, there's a way I can make myself, it wasn't actually a bug, it was the way it was written, but it was more of an exploit because it was exploiting a mistake in the logic of the program to say, I can drain this thing into my own account.
Wow.
And the hacker did that. Now, the Ethereum community had a decision to make. By the way, I should mention, about 15% of all the wealth, Ethereum wealth, was tied up in this one contract.
Right. It's the $1 billion, 150, right?
So where does that leave the community? Well, the community had to make one of two choices, and it had profound implications for the future because...
Would the two choices be, one, respect the contract to keep Ethereum running and respect it, or two, rewrite the rules and roll back and compromise the future of Ethereum because then people will not believe in the contracts.
Right.
I'm going to guess because it's their money, they went with the latter.
That is true. And the Bitcoin community, which tends toward a view that says you never do something like that,
right,
pointed at that as an example of, Ethereum's sort of original sin and said the fact that they've done that says Ethereum believes you can have such a thing as too big to fail in the cryptocurrency realm, that this DAO contract was too big to fail. And they said, we're going to opt on balance to deal with any moral hazard that may come from the future. Now, my point of view on this... They basically
took the Supreme Court. They basically added a Supreme Court.
That's right.
In a way.
They did.
Who made the decision? The majority of the
what it takes
Ethereum holders?
It was not made by fiat, so to speak. It required a political process to motivate the majority of people connected to the Ethereum network, both individual participants and so-called miners, to upgrade their software to the new version that essentially reverses the implications of this DAO hack.
So they killed that person's currency in the new version. They said, this person stole. We're going to, what? Just make their currency evaporate overnight, and we'll reissue those currencies, essentially.
Essentially, people got their money back. They forked the network, and people got their money back. Now,
so they shut down the old network?
No, that's the fascinating part. There are now two Ethereum networks. There's a network of people connected to the old Ethereum, which is called now Ethereum Classic, like Coca-Cola Classic, I guess. And there are the folks who have continued to forge ahead on the new fork. So there is no longer a single Ethereum network. There are two. So let me pause here and explain why this is relevant to, a NASDAQ or a Visa. It's relevant because a lot of people have been telling financial services businesses, you got to get on board with Bitcoin, you got to get on board with Ethereum, you got to get on board with these open networks. They're never going to put their customer money or client money on a network that requires a political process that can have factions and have bank money sitting on potentially 2 or 3 networks. It's not going to happen. So this is what has really given rise to this idea that we can take the underlying principles of a distributed ledger using cryptography to move money instantly over distance at low cost, basically get money over IP just like we have voice over IP. And do that without having to take on a lot of the downsides of this open decentralized network. Now, I want to be clear, there are trade-offs. In other words, what do you trade off? Well, you have to, in a sense, involve institutions in operating these networks. Right? Because you're saying we're going to explicitly allow them to set the rules for this network.
They're going to make their own. They're going to make their own Bitcoin, their own Ethereum.
That's right. Now,
which limits the upside of it.
Well, here's the other.
It's not part of something bigger, but it certainly limits the downside of hacking and.
Here's the other critical difference.
Governance.
So on what you said, which is it's a different network. So imagine a NASDAQ is running a blockchain, Visa is running a blockchain, et cetera.
That's what's going to happen.
That's what we think is going to happen. And the other critical difference is on those networks, what are the currencies and assets? They're dollars, they're stocks, they're loyalty points, they're gift cards, they're bonds.
Right.
There are 100 trillion of quote unquote financial assets out there. There are $12 billion of digital currencies.
Right.
We're interested in converting some percentage, some non-trivial percentage of that 100 trillion of financial assets onto
So
a cryptographic ledger.
Well, just think about points. Like the whole point system, just miles.
Yep.
That is a real system.
Yep.
And I know because I had so many Star Wars points at one point that I was going on vacation for free every year. It was great.
Yep.
Not anymore, but gosh, it's real money and people trade them. And there's a whole aftermarket and there's a whole group of people who do crazy things to get those miles.
And by the way,
things.
the point bank systems are a massive business.
They are.
So Starwood and all the other loyalty programs you use, there are massive financial services operations underneath those that they license to run those systems. And that's just loyalty. And that's a tiny fraction of this thing. So the market is, I think, more unbounded on the traditional financial instruments. And I think it's actually what people want. People do not want to receive Bitcoin in their paycheck. They don't know what to do with it. It's like getting a foreign currency in your home country. So that's the crucial difference from where we started with Bitcoin, Ethereum, and so on.
Okay. You know what's the most interesting thing? You ever hear of this guy, David Phillips, the pudding guy?
No.
So this is pretty great. This guy was an American civil engineer.
Okay.
And he accumulated more frequent flyer miles than anybody by doing a promotion by Healthy Choice Foods in 1999. So what he did, the process, I'm looking at the Wikipedia right now, it's hilarious, is he calculated that the return on a mail-in food promotion outweighed the price of Healthy Choice frozen entrees, which were selling for $2. But while shopping, he also found that Healthy Choice soup cans were only 90 cents. He later discovered that the same promotion also included individual pudding packages at 25 cents a piece. While shopping at a nearby grocery outlet, he subsequently visited 10 grocery outlet stores in Sacramento area, buying every case of pudding available, totaling 12,150 individual servings of pudding for over $3,000. He also had a grocery ad manager order additional cases. In order to divert attention, he claimed he was stocking up for Y2K. That was the year for those people out there.
Argument.
That was year 2000 when people thought it was stocking. Yeah. The details of the promotion included a bonus if the packages were mailed during the month of May 1999. The mileage earned would double from 500 miles to 1,000 for every 10 UPCs submitted. So for $2.50, you would get 1,000 miles, I guess, which means if an average hotel room is 10,000, for $25, you get a hotel room. Phillips, unable to remove all the UPC symbols himself in such a short period of time, recruited members of a local Salvation Army branch to help peel the UPCs off the currency. In exchange, Phillips would donate them the pudding.
Incredible.
He submitted proof, and they awarded him 1.2 million frequent flyer miles, which is probably about, what, if it's 50,000 for a first-class ticket internationally?
Here's why you do that, because the subsequent stories are great free PR.
Well, that's what happened. So it turned out ConAgra were not, nor the airlines were disadvantaged because they got so much publicity.
Yeah, genius.
It was like, and the story was recreated as a subplot in the 2002 Paul Thomas Anderson feature film, Punch Drunk Love.
Which I actually never saw.
I never saw that. Let's put that on my list.
Yeah.
Okay, so.
Can I tell you something about point banks?
Or Punch Drunk Love.
We can talk about
Paul Thomas Anderson.
We could talk about a movie we've never seen for 5 minutes.
Go ahead.
Okay, point banks and all other financial infrastructure, so ACH, wire transfers, SWIFT, the credit card networks, the way securities move. I didn't know this before I got into this and started this company. Financial infrastructure is so broken. If you take people from Silicon Valley and you said, I just want you to study this problem and look at it, just observe it, they will you will literally lose your mind. And the people who know this are the fintech startups who will explain, because what are all fintech startups basically doing? They're all building thin layers on top of these old legacy, horrific infrastructure systems.
Right.
And making them actually usable. Like Stripe makes stuff usable, Robinhood and Wealthfront. They're abstracting it to make it developer-friendly, consumer-friendly, business-friendly, and that's very valuable. But what they're not doing is doing the sort of fundamental rewiring of the system. Now, obviously, that's our mission. It also means it's a more ambitious, harder, longer-term effort to actually get in there and try to change the guts of financial infrastructure and payments systems.
I feel pretty good right now that 2 out of the 3 financial startups you mentioned I'm an investor.
Good. Yeah, those are all companies I like.
Robinhood and Wealthfront. I didn't get into Stripe. I should have. Oh God, that would have been so yummy. But I'll take Wealthfront and Robinhood. Those are doing pretty good too.
Yeah, you can use Stripe.
I could use Stripe. Always
have a free
have
account. That's good.
Yeah, I miss Google, but I could always use it. Okay, show me your product. I want to see chain.com and know what you're doing. So you basically charge these companies, right?
We do.
You're like an enterprise software company.
So our technology is ambitious and novel, but the business model and the actual sales model are actually pretty vanilla.
Okay.
So think of us like a next generation database vendor, next generation network vendor, where we have
Your Sybase, your Oracle.
Yeah.
I got it.
That's right. Okay, so
In the cloud or on their servers?
So we are doing on-prem.
Okay.
So you can't run financial infrastructure, the type of stuff we run in cloud. There are certain companies like Capital One who have put up their hand and said, we're doing cloud. And even then,
When cloud, as in public cloud, like Rackspace or
AWS,
Amazon.
Capital One has a deal with AWS. AWS has announced recently they're doing a huge new push into financial services. Microsoft's doing a lot. So cloud is coming. But
that Azure is taking off.
Azure, and they've announced Azure on-prem. So cloud.
Oh, they have Azure on-prem?
In beta right now.
How does that work? They put the stuff up there and they maintain it for you in your office?
Think of like all of the same interfaces and tools, but deployed on-premise.
Do they deploy it for you and put a person there, or do you do it yourself?
I don't know the answer to that question, Jason.
That'd be interesting.
No.
But they could also give you the person to manage it. They just give you an engineer to have on site.
That would be nice. I bet you for the right customers, they do. But yeah, so we're on-prem, and we have a product called Chain Core, which is the actual software you deploy. And you can instantiate new networks. And then everyone connecting to the network runs a Chain Core, and it's essentially the database for money.
Got it.
Right?
So here it is.
So
I'm looking at a wallet.
What am I
wallet
showing
is this?
you? All right, so this is a demo that I took the skin off. I took the branding off so we could bring it out today. And the basic idea...
This looks like a wallet, like the...
Just looks like a normal wallet, right? Like any sort
the iPhone wallet.
That's right.
The Apple wallet.
Now...
I see you have a Starbucks card with 26,000 points on it.
Yep.
I see a Delta Sky Miles.
So you can see on the right-hand side, they don't have Starbucks, right? So
no Starbucks.
Let's say we want to hit receive, and they're going to bring up some sort of code. This could be anything, NFC, but we just use QR. And then the left-hand side, we want to say, actually, we don't want to do send. We want to do pay. And then it's going to bring up a camera. And you can't see this on the screen, but I'm actually just going to scan the right with the left. Actually, you can see that. Now, here's the first thing that you'll see that's kind of neat. It says, what asset do you want to send? And the right-hand side doesn't have Capital One, so I'm going to send some Capital One rewards. I'll send 50 of them. I'll hit OK. And that's it. And you can see the Capital One rewards popping up on the right-hand side. Now, what's noteworthy about that is that transaction did not go through some sort of point bank system. These are two different wallets connected to the network, just like two different Bitcoin wallets might be connected to the Bitcoin network. And there's an asset on that network called a Capital One Venture Reward Point. And it was sent from the first wallet user on the left to the wallet user on the right.
Got it.
And if I switch over, if you switch over to my desktop view,
Yeah.
you can see this is the actually underlying blockchain. If you look at this transaction here, you can see that Devin sent Adam this asset ID. You can see they're the same asset ID.
Yep.
-50 plus 50. And you can actually drill in, and this will look familiar to engineers that have looked at blockchain.info, Bitcoin network. This is just the raw blockchain data. Only here, instead of Bitcoins moving, we're actually moving reward points that were issued by
And that
Capital
wallet
One.
has some type of cryptography in it. It has some type of unique identifier that's not revealed
That's right.
to Visa or to the other person.
Correct. So this is, these wallets have private keys, which are signing transactions. So when the first wallet sent the Capital One points to the other wallet, what they actually did is they have a key on the device, and there's a key in the cloud as a backup. And the key on the device is signing the transaction and basically saying, go into my little box on the blockchain, my account, take some of those assets out and push them to this other. So a blockchain is a push model. There was no, hey, I want to authorize into some master system, drawdown. It was just a peer-to-peer. The closest analogy is, oh, my wallet's over there. The closest analogy is if I hand you cash. Right? Here's $10.
It has a serial number on it.
Yeah, that's it. It's a bearer instrument. In other words, the ownership is defined by control, and control in this realm just happens to be through cryptography. So let me show you a second little demo, which is, let me pop over, and if you pull up the desktop again, I'll open up a Starbucks terminal, and say we want to buy an iced coffee. And let's say we buy it.
It's $84 now here in San Francisco for an iced coffee.
Okay, well,
I thought it was Phil's.
We can do $84. Okay, so check out.
That's a little ridiculous. That's not until 2021.
Right. Now, if
isn't it amazing that people are lining up at
if
Phil's
you
for
could
$6
picture not the phone I just said that I prepared to do, but the other phone that has 4 different assets in it.
I think he did it. Yeah, it's on the left-hand side there. Look at that picture in a picture.
Actually, can you do the other phone?
Yeah,
because Jason wanted an $84 purchase, and one of the phones has $84 in it. The other one doesn't.
There it goes.
There we
Boom.
go.
There's the
Okay.
other wallet.
So now,
look at this. We're putting together two different screens here.
now yeah, it's pretty. This is pretty
cool.
legit. Now,
Pretty
if I go to
legit.
pay,
TriCaster.
I will scan,
Okay.
and it'll
Boom.
say, paying $84, and I can hit
Confirming
pay,
it. Good.
and it's just using dollars. Okay, so that wasn't that exciting, but let me do it again. And if you could switch now to the other phone, and you'll see why I'm asking you to do that in a second. Go back to the terminal.
Mm-hmm.
And this time, let's do something more reasonable. Let's do like $4.50, okay?
Got it. Okay.
Now, do you see, you see how high I only have $4 in this
Yeah.
wallet? But I do have these other points,
Sure.
right? So now when I go to checkout, it says $4.50, and it says, by the way, accepting all these other assets. So now when I go
Delta
to,
Sky Miles are
That's
available
right.
to pay for coffee.
when I go to pay,
Zoinks.
now if you see it says you're paying with, there's a kind of a liquidation preference here. So first it's going to use up my rewards. Those are out. Now it's going to switch over to my Sky Miles. Those are out. Now I have $1 balance that I'm going to pay out of my USD. And when I hit pay,
Which is US dollars, obviously.
that's US
so
dollars.
people
Now
haven't
when I hit
figured that out
pay, all those assets now have been transferred to Starbucks.
yet. Yep.
Now here's one
love
last step. By the way, if you see the wallet, all my assets are gone because it's just like a bearer instrument. I just handed those over. It just happened to be digital.
You cleared them out.
And unlike a photo, it didn't copy it. It just transferred it. The last step is if you look at my treasury account, which is over here on the left-hand side, this is Starbucks looking at their treasury. Do you see that? You see in their treasury, they have 51,000 Starbucks points, but now they have dollars.
Yep.
They also have Sky Miles and rewards points, which they don't want, right? They want
just
to
click and settle those.
They want to click and settle them. So let's see. Okay, if I go over to Sky Miles, I want back dollars. Okay, I see that Delta doesn't have dollars. So let's see. Does Capital One? Capital One does. So we'll do it with Capital One. So here's Capital One. They do have $1 balance. So if I go to Starbucks and I click settle here.
Yep.
What's going to happen, 1, 2, 3, is they sent those 50 back to Capital One, and in return, they got 50 cents back from Capital One. And you probably can't tell, but this USD balance is now 50 cents less. And finally, if I actually go to,
And we could take the wallet off right now. You take the phone off. There you go. Boom.
okay, let me show you a couple things now in the underlying blockchain, which is, you remember that transaction where I used 3 different assets to pay for something,
Amazing.
all in
Yeah.
one transaction?
So cool.
And if I go to Capital One's view of transactions, you can see this settlement less than a minute ago
Yep.
with someone they gave up 50 cents and they got back their 50 points back. And you can see that
Amazing.
underlying data here. So
there'll be
what's
just a totally
interesting?
free-flowing economy across massive asset classes.
Multiple asset classes. And you said in your introduction, here's an open ledger technology. That's what this is. It's just issuers of assets, whether those issuers are issuing loyalty points, issuing dollars.
Is this some sort of open standard, or this is your standard?
This is
The chain.com
It's
standard?
both, actually. So we developed this over the last 2 years, the underlying protocol, which is, it's not Bitcoin, it's not Ethereum, it's a new protocol specifically designed for issuing and trading these financial assets. And that is open source.
Got it.
And then, for developers, we have the ability to use a free version to get up and running. And then for enterprises, we have licenses where you can put this into production.
Right.
So that's the underlying idea. So this is a really simple demo, but the real point of it is we think assets should just move like data. And whether it's iPhones, whether it's terminals, other types of back-end infrastructure, it should just move around as freely as data. And we shouldn't have siloed proprietary systems that can't simply move assets around.
This reminds me of is In Time, which is the film, the science fiction film with the actor of our time, Justin Timberlake. As you can see here, he has a code.
Now I don't feel bad that I didn't know it.
Check out the screen here. You can peek around, and he's got a code on his arm. That's actually his Bitcoin balance.
Right. It's
on his arm.
Right.
So in your arm is an LED basically with how many credits you have left in your life. When your credits run out, you know what happens?
You die?
You die. So literally he's playing poker with a guy who's like a billionaire essentially, and he's got hundreds of thousands, and he goes all in. And then he loses, the guy hits quads and he loses and he dies. That's the end of the film. Spoiler alert. No, that's not the end of the film. That's like one of the first scenes in the film. But basically people are getting on the subway to go to work. They're using some, they're getting a coffee, they're using some. Then they get their money from work, but they're living, instead of living paycheck to paycheck, they're living life to life, basically. Their credits are going to run out and they're going to be out of life. So how do you guys make money? You just sell software.
Yeah.
That's it. How do you charge? You charge like a per transaction fee, a monthly fee, both?
We charge a lot, and here's why. This is mission critical infrastructure that's powering money movement, asset records. It's cryptography. It's expensive because it's really hard.
So not by transaction, just tens or hundreds of thousands of dollars per installation per year.
It's expensive and it scales with volume. But one of the
what does it cost for someone like Visa to implement something like this? Millions of dollars, I take it.
enterprise production systems are millions of dollars.
Millions of dollars.
Yes.
You have 25 people in the company. You've been doing it for 2 or 3 years. Has any of this been deployed yet, or is this all
Actually,
new?
no, it has. We did our first production network this year with NASDAQ.
Oh, really?
So we launched a network, you'll like this, for private market security. So actually our entire cap table is on a blockchain.
Wow.
And there are
like eShares is doing this now.
Yeah.
Like you put your cap table on eShares.
eShares, and there's a whole competitive set of companies.
Second Market was...
Which NASDAQ acquired.
Right.
And they have a private market business. And they went to say, we're going to build new infrastructure in this area. And they said, let's do it on a blockchain.
Got it.
And so they're operating that.
So if Uber were to put their cap table on there, or Facebook pre-IPO, you could have your cap table on NASDAQ's system. Before you IPO, you could be doing secondary transactions with accredited investors.
Nailed it.
And do it through some sort of web interface on a blockchain.
Correct.
And never have to worry. And then you could also does yours have a rule system like Ethereum so that I know that this class of shares has participating preferred and has a 2x liquidation preference?
That's exactly right. So every asset has asset metadata that defines everything
Common
about
shares,
the asset.
Preferred shares, whatever.
And then when we go to do a secondary transaction, you want to buy chain stock on NASDAQ Private Market. You go on NASDAQ Private Market and you can get a dollar balance because there's a global bank that is connecting in to issue dollars. And then when we actually trade, we don't use a central clearing system. We just do what's called an atomic swap. That the two of us create one contract and the assets swap.
Got it. Yep. So you just do it one-off.
That's right.
This way there's no shenanigans. You can just review each one at this early stage.
Yep.
In the future, there is a theory that private company stock will move as freely as public company stock, which, if that does happen, what's the difference between a private and a public company? I think what's going to happen is, I don't know if you know about Eric Ries's long-term stock exchange.
Long-term stock exchange, and
where
IEX.
So I think he wants, if you buy a share, you agree to hold it for some period of time, and the price is different. So if I agree to buy a share for 3 years, I might pay 30% less. If I buy 2 years, I might pay 20% less. If I buy it and I hold it for a year, it might be 10% less. If I hold it for 10 years, it might be half the price. I don't know.
Yeah.
I think that's what he's doing.
I don't know what the actual model is. It sounds a little bit like Jet.com. Like they're probably going to experiment a lot with pricing and then land on something.
And then sell to Amazon.
But I subscribe to the kind of Warren Buffett, buy things you like that are valuable, hold them for a long time, you'll do well.
Yeah.
I'm not sure why we need a product that puts constraints on us, but I do like the philosophy behind the startup for sure.
I'm trying to figure out if you could only buy 3 stocks and hold them for the rest of your life. Tesla's one, okay.
Amazon,
okay.
And Google.
So that's interesting.
Yeah.
Those are probably, because I've done this with 5, and those 3 are in my 5.
You can't. Tesla gives you the upside.
Yep.
Google gives you that stability, and Amazon's kind of a wild card. Like Amazon could be 10 times what it is today.
I think Amazon becomes the first $1 trillion company.
Yeah.
I think they pass Google, and I think they'll pass Google and Apple. But you left Apple out. Why? One hit wonder.
Apple has become the most consistently solid company, right? I mean, look at today. Today was the Apple announcement. It's exceptional in every way, and yet you ask people, and they're like, "Yeah, it's fine." Like nothing. It's not clear that they have the ability to look around the corner that they had when Steve was running the company. So I don't know if you have 5x or 10x or 20x, the type of kind of risk-weighted return you're looking for. Obviously, they're not going away. But
there is a theory that they're out of bullets, and I think that there is definitely an innovation problem going on there, and I don't think it's that they can't innovate. I think there's a leadership problem where they don't have the chutzpah and the drive that they had under Steve Jobs, under Tim Cook. And Tim Cook is so proficient at efficiency and supply chain that if you look at their things that are going to be accretive to the bottom line, I think I'm using the word correctly here, it's a battery pack for the iPhone, headphones, incremental changes to the existing product lines like Watch 2, Phone 7. And when you start making your money on changing the lightning connector from the headphone jack, adding USB-C instead of whatever, and then adding a battery pack. It seems to me in headphones, it seems to me they're trying to make money desperately to keep the revenue printing machine, but they don't want to do big M&A. They don't want to buy Tesla. They don't want to try to buy something like Slack or some big asset. So they don't want to put the money to work, and they don't want to release a Hail Mary crazy product that is a category defining product. You don't see a VR headset. The watch was a dud.
Yeah.
Like today they were trumpeting that they were the number 2 watch company behind Rolex in terms of sales. And it was like, that's like ridiculous because nobody buys watches. That's like, I'm the number 1 timepiece. I'm the number 2 timepiece company. It's kind of pathetic. Like, what do they do with the Titan project, the car? Now they're like, yeah, we're not going to make a car, and we couldn't get a deal done with Mercedes-Benz or BMW. If Steve Jobs had walked in, they would have had a deal with any car company they want. Ferrari and Lamborghini and BMW, they would have lined up to work with Steve Jobs. And then if you look at the TV business, they never launched the TV, the actual physical TV, and they haven't been able to get an over-the-top service going because nobody can seem to negotiate and do the reality distortion field. So it shows you the value of Elon Musk or, on Tesla.
This is why I say Google, because it's more of an auto-scaling business model. They don't have to do a lot for the thing just to keep scaling. Whereas Apple has to come up with new categories
because
advertising
is so effective, and
the internet is just secularly growing. Like, it's not going away.
Right.
It's growing.
Still got
Device
a couple more billion people to use. Yeah.
Like Google benefits Google is just like a long-term bet on data and the internet. Apple has always been a product bet. So unless you can
made by people,
and products are made by people, and it is funny though. I will have to say the headphone jack thing. Everyone says Apple doesn't take enough risk, and then they take the headphone jack out, and then everyone says, well, not that type of risk. That's too risky, right? So it's a little, but
they also launched wireless headphones today. I missed the headphone.
They did.
Thing.
They launched their ear pods.
But do they have a rope between the two of them, or are they independent of each other?
Independent.
So they're just 2 little things you stick in your ear.
That's right. I don't.
What was the price point?
They're $189. Somewhere between $139 $189.
What are they called? AirPods?
Earpods.
Well, that's kind of innovative, I guess. There's like 2 or 3 other ones out.
Mm-hmm. You want to hear a weird prediction about Apple?
Yeah.
It's not really a prediction. It's just like it'd be interesting if Apple bought American Express.
Why?
Because Apple Financial Services is broken, and American Express is plateaued, but they're a premium brand, just like Apple's a premium brand. And Apple would need a bank if you want to get serious about financial services. And American Express is actually a bank in addition to a payment network, in addition to a premium brand. So it would be a weird purchase, but I think Amex needs to find a home, actually, which is not something you hear a lot around the Valley because it's not talked about a lot around here. But Visa and MasterCard are crushing them. And I think Apple's a great home for Amex.
I like that. They would have a payment processor. It's high end. I'm looking at the AirPods.
Earpods.
Here.
Yeah. Oh, is it AirPods?
AirPods.
I kept saying earpods.
Well, I guess these are the AirPods. They look like little Q-tips. I don't get it. It's like they look like
what? If you look at
if
you look at your headphones, it's exactly the same basic form factor minus the cable. So it looks like it's long, but it's just you don't notice that because you don't normally see it without the.
So I guess that's the battery in there. I guess they put the battery in, and then you have to
it's a little microphone. So here's what's neat about it. There's a microphone.
Sure.
And the music doesn't start playing until you put it in your ear as a sensor. You ever start something like a podcast and you put it in your ear, you got to rewind?
You're like, I missed like 30 seconds of Jason Calacanis' podcast.
That's the stuff Apple still does better than anyone.
Yeah,
that little human insight and detail executed well.
Well, here's the thing.
And that's not going away. So obviously you hold Apple.
I buy. So they're going to still be a cash printing machine. But I think it's very interesting that you picked Tesla as that group because I believe Tesla could be a 10x company from here.
Here's the thing. Tesla is a venture return in the public markets. Yeah. You don't normally get to say, I want a 6x, where do I get it in the public markets? That's usually what a rich, wealthy private investor gets to do. Yeah. So you can go on E-Trade and you can go buy Tesla at 30 billion or whatever, which is kind of like, it's a startup valuation.
It should be.
It's a top tier startup valuation. It's like going in and buying Slack or Snapchat or Uber.
No, if Uber
but you have
was
access
public,
to it.
Some people believe Uber, if it went public today, would be worth 50, not the 70 it got in the private market.
Sure.
Some people think it would be worth 120. Some people think it would be worth 30. As a matter of fact,
probably have to grow into their valuation a little bit, but yeah.
Well, there's like one guy who's like the pessimist from NYU,
right?
Who like just hammers every company, and he put a $30 billion valuation on. On which case I said, wow, if the guy who's known for being a jerk about valuations and just running every valuation down to the lowest possible thing says 30 billion, I'm in pretty good shape.
Yeah.
But
you don't get to do that in the public markets very often. So
yeah, I agree. I would.
Tesla,
I think I'd have Tesla, Uber.
Square's another one where you got like
No.
Let me tell you why Square. Square at the price they're at.
Oh, okay.
At the price they're at, and with the
What are they at? 2 billion or something? Market cap?
I think they're well above 2 billion.
3 billion.
Let's take a look.
Square market cap. I'll take a look right now. I thought they were at like 2 billion. Let's see. Market cap 4 billion.
Four. Again, 4 billion. How many companies can you invest in Silicon Valley? At a $4 billion valuation? Again, it's obviously you're making a risk-adjusted bet, but they've got this lending thing. They've got unique data coming off the merchant terminals, and they've got a great product founder who's running the bit. People give Jack Dorsey crap for running two companies. Look at Satya Nadella. How many companies, quote unquote, is that guy running?
Yeah, but I know. But Twitter is a damaged company that's making no progress. See, this is where I disagree with you. Twitter is really screwed. I mean, they're going to sell it tomorrow.
Let me ask you a question.
It's Wednesday.
Let me ask you a question about
September
Twitter.
2016. Tomorrow on Thursday, there's a board meeting where they're going to sell it.
Is Twitter ever going to go away as a product?
In the same way that MySpace went away, no, because
You think Twitter becomes MySpace?
no. They would have to seriously continue to mismanagement. So no, I don't think it can, is my answer.
Yeah.
I do think it could become deprecated to where it loses half the current user base and it becomes almost like a newswire for famous people where they just, which is what people kind of thought it was. I think Ev's original idea around it, why his contribution was, this will become, instead of you having to put together a bunch of RSS feeds and aggregate them into a Google Reader or whatever reader, feed burner, we can just kind of make one for everybody, and then they could syndicate whatever they want to twitter.com/Jason or /Ev or /Jack. So that made sense. Like if you think about it like that, it's almost like feed burner. Well, what was the one that Dick Costolo did? What was his feed company?
Was it FriendFeed? No.
No, FriendFeed was bought
by Facebook.
By Facebook, the other. Dick Costolo startup. What was his startup? I forgot the name of it. He's doing a fitness startup now. I forgot what his startup was. I'll have to look it up. Anyway, what did I miss about your company? Anything else? Oh, FeedBurner was his.
FeedBurner.
Which was, I think, bought by Google. Yeah, Google bought FeedBurner. FeedBurner is just like a great way to publish feeds in one central location, which was what Twitter is. But my God, Jack has like not advanced the product at all.
I think Twitter Moments is good, actually. I know it's early, but I think it's good for what it is.
It's a nice place to collect your news.
Here's my thing on Twitter is I don't think it ever goes away. I think with the right leadership, it can grow. And I think you look at the Olympics this year and how horrible the experience was on NBC. And you ask, who can fix that? What platform can fix that? The only one that actually comes to mind is Twitter. Yeah. Facebook maybe, but Twitter. So it feels, but Twitter's a little bit like, you're right. It's the company that's always, it's sort of like they have a lot of potential and they always will. And that's been the curse.
I think Jack is the wrong person to run Twitter right now because it doesn't have his full attention. And I think that he is so aligned with the social justice warrior, Black Lives Matter. Like when you're running a platform like that and your thumb's on the scale for either group, if he was right or left or middle or up or down, it doesn't matter. But I think that Zuckerberg's done a great job of assuring people by having Glenn Beck and everybody there and of neutrality of a neutral platform. On a communications platform, if you tip the scales to any one group, everybody assumes that it's for nefarious reasons and that you're doing it to a level beyond what they can perceive. So when he bounces Nero off and he's, marching and whatever thing, they just think, oh, this is the platform for social justice warriors. This is the platform for Black Lives Matter. But anybody else, if you're a conservative, you can't be on the platform. That is such a colossal mistake to make for him to put his own politics into it, that it just shows it's his little playpen. That's how people look at it. They say it's going to be his playpen. It's going to be his rules.
I don't know.
And when you look at moments,
I don't know how damaging that. I mean, I think he's on the right side.
I think you lose 49% of the country, 48% of the country, eventually.
Yeah.
So I think
he had him on Twitter, but yeah, sure.
We had some percentage of it. And then if you look at moments, do you notice how moments is skewed very much to the left?
That's probably why I like it.
That's probably why you like it. It is so lefty.
Yeah.
Like they make fun of Trump. They go pro Hillary. It's pro Black Lives Matter. It's pro feminism, pro social justice warrior. It's a little too much social justice, which then reinforces what probably is an incorrect belief that those people aren't wanted there. They do want those people who are conservative. They do want the right. And listen, it appeals to me because I'm a libertarian. I'm more left than I am right, I guess. I don't know, labels. But just on a platform basis, platforms need to be neutral. You know, like YouTube is not coming out saying like, we disagree with this group of people and we love this group. Susan Wojcicki.
That's fair.
You don't know her politics.
But you know what? That just says what Twitter is, which is a media company, and all media companies have basically a point of view at this point.
That's true.
So maybe they're just...
So they'll be as big,
maybe they know
and they'll be as big of a failure as media companies have been. Congratulations, you just put yourself into the low single digits, right? You're now a low single digit company.
You're really making a strong case not to buy Twitter right now. Unless
buying Twitter right now...
For the premium, for the M&A pop, is that what you're saying?
I think buying Twitter right now for Google or Microsoft is a no-brainer.
Yeah.
For $10 billion or $15 billion, or whatever it's going to cost, $20 billion, it's a no-brainer because look at, they could actually, they know how to make it into a platform. It's an interesting data
asset for Google in particular, and I feel like Google could do, I mean, look at what they did with YouTube. They've done a phenomenal
for
job.
search. They would be the perfect steward of, they would turn into a $50 billion company.
Yeah.
And I don't think Facebook will buy it. They could have probably by now and have the market cap do it, but I don't see Facebook doing it because why would Facebook do it and ring every antitrust bell? If they're going to ring every antitrust bell, they should wait and just pay the $40 billion for Snapchat. That's a growing service,
I think
not
Google's
a dying
buy
service.
Snapchat.
Google's going to.
I think so.
Really?
Yeah. I think Facebook...
What will Snapchat sell for? If it sells in the next year, Snapchat
50.
sells for 50.
Yeah.
50?
Yeah.
50 billion with 100 or 200 million in revenue. 50 billion.
Yeah. Because I don't think the founders...
What is there, 100 million people using Snapchat right now?
It's probably more, but I think that was the last reported number, yeah.
So with 100 million, if you divide that by 50 billion... No, it's the other way around. 50 billion divided by 100 million. Mm-hmm. 1, 2, 3. 1, 2, 3. So 50 billion divided by 100 million is $500 per user. Wow.
Is that a record? That has to be some sort of record, or it's got to be close. Right?
I think it's... Well, WhatsApp had a half billion.
Right.
500 million is sold for 20 billion.
Yeah.
So 20 billion divided by 20 billion, not 20 million. 20 billion times 500 is $10 trillion times $10. No, times 20. Oh no, it was bought for 20 billion. And if you divided that by...
It's $40.
$40, yeah. Yeah.
500. Oh, sorry.
By 500 million.
20. 1, 2, 3, 1, 2, 3, 1.
$40.
We can do math, everybody.
It's $40 per user. So this would be 12 and a half times the purchase price.
Well, and here's why I say that. I don't think...
Because they could grow 12x.
That, and I don't think they want to sell.
So they get a double premium.
So
they grow 10x.
It's like, if you want to be insane and take us out, this is what you have to take it for. But I think Facebook actually threw a little bit of a wrench into the equation there with Instagram stories, which...
is so good.
And it's actually... I mean, this is a new chapter in competition, right? Like, just the blatant, like, you were right. We're going to acknowledge this was your idea.
It's throwing up the white flag and then shooting the person in the face.
Yeah. You don't see that. Silicon Valley has typically always tried to do something slightly different and then pretend like it's innovative and new. But they've just said, you know what? This is just a new format. And they kind of said it like this. Hey, we invented, photo filters. You guys invented stories. What's the difference? We all kind of just copy each other. So this is just the new normal. And...
Wow. I agree. It's the Zuckerberg effect on Silicon Valley.
Yeah.
Zuckerberg is a marauder. He's a mercenary. He does not care. He's like a Boba Fett. Like, he'll work for Jabba, he'll work for Darth Vader. He doesn't care. And it really is like sending up the white flag and being like, we give up. And then the person's like, oh, you give up? And they're like, yeah. And then they just take out their shotgun and shoot you in the face.
This is why I'm in fintech.
I thought it was one of the most classless, brutal, non-Silicon Valley, uncool things to ever do.
Instagram stories?
I was disgusted. I'll be totally honest. I was disgusted. I feel like it's the end of Silicon Valley in the early stages, where if you were going to copy something, at least you try to build on it, right?
But here's the thing. You could argue that this was good for users because I have my wife, my friends, they love this feature. They want this feature. So now now they're like...
And why do I have to rebuild my social graph? And I want my name to be public.
This was the same thing Facebook did with the feed.
Right.
After Twitter. So this shouldn't have actually surprised anyone. I don't know why I just said it's some new thing. This is what Facebook does, as you said.
I think it was the level of explicit copying. It was, remember, the Samwar brothers are the rocket internet scumbags from Berlin?
Yeah.
These pieces of garbage would literally have a team of people watching as startups launch.
So maybe they were the innovators.
And copying.
Maybe they were the innovators.
You know what?
That's what we're all doing now.
The Sam Brothers stock is getting crushed because you know what? Here's the thing. If you don't have the intent and you copy somebody, you don't know why you put the pixels where you did. You probably don't. Unless you're just a phenomenal copier. So there's very few, like they created, who was the person they created to kind of replace the Beatles? What was it? The Beach Boys or no? There was somebody who was created as a Bob Dylan knockoff, and there was somebody who was created as a Beatles knockoff band. And
I have no idea.
I forgot the name
the
of
Beatles,
it.
Though.
Not a tribute, but the Monkees.
The Monkees. Okay, sure.
So the Monkees were created specifically for the Beatles. And you know what? They reached some level, but they also became like a laughing stock.
Yeah.
And then...
But you think Microsoft's going to be successful knocking off Slack? Isn't that the Monkees? Or is that...
Of Snapchat?
No. Slack. You think... is Microsoft Slack the Monkees, or is it...
It might be the Monkees.
Yeah.
It might be the Monkees. I'm trying to think of somebody who copied the Beatles or Bob Dylan and did it better. It hasn't happened, has it?
I'm not sure you can say someone was better than the Beatles and Bob Dylan.
No.
Those guys were high water marks.
That's what I'm saying.
Yeah.
So maybe it's not comparable because it's art. But to have other people copied Scorsese and done it better, or a film director might be a better, or an actor, somebody copied Marlon Brando and done better?
It's a fine line. All of Silicon Valley...
George Clooney better than Cary Grant?
All of Silicon Valley influences each other. We're all building on each other's successes and innovations. That's the story of the Valley. But at some point, you're saying there's a bright line where you take it too far.
That's
where it's blatant.
That's just one man's opinion.
Yeah.
It's one person's opinion. But my opinion is, if you evolve it, then it's in one category. If you copy it pixel by pixel, and they use story, and they use the exact format, and they use they literally copied it pixel by pixel. When you do a pixel by pixel copy, you don't add anything, you don't bring anything to the party. It's like opening up a pizzeria across from the world famous pizzeria, copying every recipe, hiring their chef, and you don't add any new toppings.
Except your pizzeria is in the Walmart.
Exactly. Or you create 1,000 of them, right? Yeah, exactly. You've got 1,000
Everyone's
seats.
in the Walmart already.
They have 20 seats and you have 1,000 seat place. So you used your advantage to steal the IP. I think it's actionable. I think it's such a blatant ripoff that I think it could be actionable. And if I bet you there was a discussion at Snapchat, should we take a legal action against this? And if we take a legal action against this, does this take the management team out of the game and put us on a goose chase as opposed to focusing on growth? And I think they decided to not take legal action. But I think Facebook may have done it and said, if they take legal action, we win because we can afford to lose $1 billion or $5 billion, shut it down, who cares, and have a settlement. And if we distract them, oh my God, that's the greatest gift of all. If we distract them and they lose, now we've distracted the management team. Anyway, listen, we can talk for hours. You're a good guest. I'm going to invite you to come back on the News Roundtable because you have an opinion, Adam, and you're not afraid to say it. I like that.
Happy to.
You know, people in this industry, though, like I bring up stuff, and they're like, I may have to sell my company to Zuckerberg. I may have to, it's like, listen, he's a human being. If Elon Musk or Zuckerberg or Steve Jobs does something you don't agree with, or you think the products or a mistake or something like that, we're not here. It's like, these people are not idols or gods. There are only products and opinions about products, and everybody's entitled to have an opinion about it. You can be right or wrong, but everybody's like so afraid.
You're like the sports show of Silicon Valley.
A little bit.
That's what this is.
I think a little bit. I take pride in the fact that we have a candid discussion here.
Yeah.
Because everybody, it's also like, I'll tell you what happened was, I came into the industry, nobody was paying attention to me. And I came from Brooklyn, was candid. And once I started opening my mouth and I was candid, people were like, oh, that's an interesting discussion. Let's have that discussion. Then I became moderately successful. And then I started to throttle a little bit. And I was like, oh man, I don't know if I want to go to this party at Yuri Milner's house and see Zuckerberg or see this person. And then they heard me rant on the show. And then I got to a certain point and I was like, well, I really don't need anybody's money. So F it. I'm going to keep doing what I did because that's who I am. Like, I have a candid discussion. I'd rather have a candid discussion and be true to myself and be candid.
It's a better product, let's like that.
Well, it's got to be a better.
Listeners,
absolutely. I care more about the audience than I do, but I'll never have Zuckerberg as a guest.
This just got meta.
I don't think it did get meta, but I don't think I'll ever have Zuckerberg as a guest.
Maybe.
I doubt it. I think the people
He doesn't do a lot.
I tried to have
doesn't do a
Cheryl.
lot of podcasts. So I think
He just did Sam Altman's. I did a whole bunch of
good shout-out
a whole
for
bunch of
Sam
times I tried to get Sheryl Sandberg,
Mhm.
and we came very close to getting her last year or 2 years ago. And I would love to interview Sheryl because I think her book's super important, and I'm trying to. But I think I have a chance of getting Sheryl, but I don't think I get Zuck. I don't think he would want to have me saying like, "Why did you copy it?" Like, I don't think he wants to have a real discussion. I don't think Sam Altman's going to ever ask him, because Sam's going to like have to kiss his ass a bit. He's never going to ask him like, was it wrong to just copy it wholesale? Why didn't
Did you read Nick Bilton's Vanity Fair on Theranos?
Yeah, Theranos, yeah.
Theranos. Okay, so here's what's interesting. That might be a turning point where people go, maybe we should start just calling BS a little more.
Of course.
Or just saying it because there are actual consequences to...
Yeah.
So, and I think
in a photo app, no.
Even
but
Mark Andreessen on Twitter is
Yeah.
pretty candid. I mean,
yeah.
And so I think there's maybe things are changing, and maybe that'll bode well for the show.
I think there's like a class of people like myself and Mark who are, some people might say loudmouths, but other people say value candidness and value authentic discussion.
Yeah.
So, when he made his joke about colonialism and India, like, I think everybody jumped on him and whatever, but I understand what he was going for there, which is like on a historical context, like, this book Sapiens, I think I may have mentioned, like, they did talk about how when empires were built, the invading empires, net for the citizenry, it wound up that things got better. It's a very controversial statement. It's not my statement. Don't let anybody get on my ass about it. But it was like, oh, do you think the medicine, the tea, the cricket, and these other cultural things that are loved in India, they specifically talk about India, do you think people would want to revert back? Or would people who were, in Christianity, who, during the Inquisition or whatever, like if things evolved and they went through the Reformation, would they want to stay in the previous state? No. So a lot of times the invading army and the suffering that happens, what happens on the other end of it, ultimately net, as dark as it seems, at least according to this book, advances the society and is better for humanity. It's a very controversial actual position because right now it's so politically correct and they're supposed to say, no, the indigenous thing is better. A lot of times the indigenousness thing is perverse. I'm not saying that's the case in India, but he goes through a lot of things in Sapiens of like, yeah, and here's where they mutilate their daughters or mutilate this, or here's where they do that, like these things that were just barbaric.
Yeah. This is the balance in globalization, which is we want to respect and we want to be inclusive of diversity, but we have to balance that with education. If you're doing something that is, there's a health or, negative societal impact, how do we address that in a way that's not going to make us come across as colonial marauders, I think.
Yeah.
Is that,
I could tell you something. There are Muslim states that need to evolve. There's a contingent in the Muslim religion that is significant that needs to evolve and not throw gay people off roofs, not not let women drive, and not make women subservient to men and not chop off people's heads. And there's things in our society where like the death penalty is deployed in a way that black people are murdered and run through the system. So we have our own faults. But if you look net at the faults, the number of homosexuals being murdered in some Islamic states is completely unacceptable. And it's the suffering that's occurring in these Muslim states is in no way comparable to, some of the things we're still working out on a human rights basis. There is a spectrum, and the spectrum is people who have, massive human rights violations to minor human rights violations. And you have to be able to have a logical, non-emotional discussion about how society is going to evolve.
By the way, millennials are actually, so when I went to school, I'm 34.
Yeah.
Moral relativism was the norm. You can't say what you just said.
Yeah.
Because they have their way of doing it, we have ours, and we need to understand, appreciate, have empathy. And in fact, that was probably the right frame of mind then, because the opposite side of the spectrum was where we were as a society. Now, actually, if you look at what's happening at the liberal arts colleges in the United States,
safe spaces,
right, which is not moral relativism. It's saying we actually have to create environments that are protecting of folks that are dealing with oppression. And that's not moral relativism. So in an interesting, you sort of skipped a generation. Like the folks in liberal arts schools right now, they're like on board on the same wavelength, but for sort of a different reason than what you just said. So I don't know how we got on this topic, but blockchains are great.
Blockchains are great.
Blockchains are great.
Everybody go to chain.com.
And you should go to chain.com. And if you ever want to buy an expensive domain name,
yes,
email me adam@chain.com or just tweet at me.
And you're hiring. Company's growing.
We're hiring a lot. We have 15 open positions right now. So
what's the culture like? Hardworking, technical, marketing? What?
We don't think that there is a conflict between being gritty and hardworking and being nice.
Oh, good.
So if I were to sum up the culture, it would be an inclusive, incredibly hardworking, incredibly smart, but really nice place. And we happen to also get extremely lucky on our space. We have this very unique space in a loft, sort of a treehouse in San Francisco. So if you ever have a chance, you should come by.
A treehouse? Where?
In Hayes Valley.
Oh, cool.
Yeah. So it's a great place to work. If you like interdisciplinary problems, which the blockchain is because it touches economics, touches finance, touches computer science, cryptography, math.
Fascinating.
If you have to be able to hold all those things in your head at once and figure out the go-to-market, which is just as hard from a strategy perspective.
Sure.
If you like working on problems like that, you should email me. So,
well, you know what? Yeah. It's like you guys were very early, and now I think the world is caught up, right? Like when you had those seminal meetings where you had to explain to people like, okay, one more time, let's do it with heart. Let's explain one more time what's going on here, and then they get the aha moment. It's like, oh. I think it's one of the most important lessons of entrepreneurship is sometimes if you don't die, you thrive. Like not closing up shop means you're getting closer to figuring it out.
The term startup way overemphasizes the starting.
Yeah.
It's actually the easiest part. The hard part of a startup is the not stopping.
Yeah.
And
forget about starting.
Yeah,
don't stop.
Starting is hard, but it's the easy part relative to the not stopping in the face of lots and lots of reasons to stop every day. So even successful founders, and we're certainly nowhere near claiming that we've achieved some huge amount of success. But when I talk to founders who are much further along, they'll tell you that there are good days and bad days. There are days all along the way where they just wanted to stop.
Yeah.
And so you got to find mentors who are a little bit further along to keep encouraging and persisting. That's really important. Really important to remember.
I think, being an entrepreneur, it's well said, it requires a level of stoicism and resiliency that is not the normal state of human existence at this moment in time.
It is not.
Or perhaps in any moment of time. You need to have, and this is, I tell people to read Viktor Frankl's Man's Search for Meaning, not because what he experienced is in any way related to working at a startup, but that his concepts of resiliency, his concepts of remaining positive and having hope when everything around you would collapse around you and make you have no hope. And the seemingly logical, rational thing to do would be to capitulate and give up.
Yep.
You must find a way to look and say, I'm still at least in charge of this, right? And I try to explain this to people, like, it's still your choice to go to work every day and to try to solve this problem.
Here's how I try to communicate that. Have you seen Hamilton, the musical?
I haven't seen it yet.
Okay, well, you've heard people talk about it probably endlessly.
Oh my God.
There's a line in the musical that I love, and Hamilton founded the financial system in the United States. And there's this line where he says in the musical, in the face of ignorance and resistance, I wrote financial systems into existence. And I found that captured the spirit of our company so well that I put it on the bottom of every notepad of the company. So everyone who's sketching
in the face of resistance,
of ignorance and resistance,
I
wrote financial systems into existence.
I wrote financial systems.
Which, by the way, is a great example of the genius of Lin-Manuel Miranda. Just how do you come up with that line in a rap musical about?
It's some Eminem level shit.
It is. It definitely is.
I think that's why Eminem's a little bit underrated. When you think about how he actually rhymed, he's rhyming a different syllable than you anticipate him rhyming.
Yeah, Eminem was a genius in his own way for sure. Yeah,
I think it's the one person I haven't seen in concert, and one person I think his raps are so aggressive and angry at some period of time.
There was a lot of stuff that kind of was a barrier to get to sort of seeing what was going on behind the scenes.
Yeah,
but if you listen to the soundtrack, there's a lot of Eminem in there. There's a lot of Jay-Z in there. There's a lot of Busta Rhymes.
Yeah. Jay-Z's another one, yeah.
Yeah. I don't know if Ben Horowitz listens to your show, but I'm sure he'll write
Why hasn't
in.
Ben Horowitz been on the show, Jackie? I want to get Ben on the show.
Just tell him you want to talk about rap.
That's it. Get Emmy Award-winning producer Jackie. I want you to email Ben Horowitz and tell him it's time. All right, let's just tell him it's time. It's time. It's time. All right, enough of this episode. It's been a great episode. You did a good job, Adam.
Thanks. Good to be here.
You know, I look at the schedule sometimes and I'm like, okay, blockchain dude. All right, it's going to be a 20, 30-minute thing. And you lasted 75 minutes. You remained interested. You know when the show ends?
When?
When the guest gets less interesting. I shouldn't say that because I don't want people to feel who went 20 or 30 minutes on the show that they're less interesting. But sometimes I can tell the audience is, the person doesn't have enough to say to go to the next 10 minutes or 20 minutes. The audience would rather move on to the next thing. So that's my job, is to move it on. So sometimes we have two guests. That doesn't mean those two guests, it usually typically means the two guests haven't seen enough of life, haven't had enough experience to actually carry a conversation for that long. You, my friend, have done well. This not quite a two-parter, like Ed Catmull.
No.
That's one worth
I will
listening.
strive for the two-parter.
No, you can't possibly. You're 34 years old. You need when you get to 70 or 65, whatever Ed Catmull is, he's probably 60,
I
65,
think the
70.
peak of podcasting is when Bill Simmons talks to Malcolm Gladwell.
Yeah, that sort of like rips something into the time-space continuum.
I can just listen to them for 5 hours, and they could go. They don't have to. They just have to stop for bathroom breaks. They don't have to. They don't have to stop talking.
All right. This has been an amazing episode. Everybody check out chain.com and follow @Chain. Thank you, Emmy Award-winning producer Jackie. Thank you, Ashley, my chief of staff. Thank you to all the entrepreneurs who have allowed me to invest in their companies and are out there busting their ass so I can put 3 daughters through college in another 15 to 20 years. All right, this has been great. We'll see you all next time. Bye-bye.